Let's Trade Smart, the place where we break down the weekly charts of gold, Bitcoin, silver, and other major markets to understand what the charts are really telling us. Today we're going to talk about gold and the possible scenarios for the coming week, but before jumping into the fresh analysis, it's very important to briefly revisit what we discussed last week, because the market actually respected that analysis almost perfectly. In the previous weekly outlook, we talked about the possibility that gold could move toward the 4,900 area, and if you look at the chart now, you can clearly see that gold pushed up and printed a high around 4,858 during the week. That means the market moved almost exactly in the direction we anticipated. We also discussed another very important level on the chart, the 4,602 zone, which we highlighted as a major support level. The idea was simple: as long as gold continues to stay above that support, the market could spend some time consolidating within this range for the coming weeks instead of immediately trending in one direction. So that was a quick recap of last week's analysis, which is still available on the channel if you want to watch it in detail. Now let's shift our focus to what the latest weekly candle is telling us and what could potentially happen next week. If we observe the current weekly candle that has just closed, it is technically a bullish close, because the candle finished higher than where it opened. In simple terms, it's an up-close candle, which usually indicates that buyers are still present in the market. However, there is a small but very important detail hidden inside this candle. During the week, gold swept the previous week's high, taking liquidity from the 4,800 level, which is the high of last week's candle. In other words, the market moved above the previous high, triggered the buy-side liquidity, and then pulled back before the weekly close. This kind of behavior often tells us that the market has just collected liquidity before deciding its next move. Because of this structure, the chart now shows three possible scenarios that traders should keep in mind for the upcoming week. The first scenario is the straightforward bullish continuation. In this case, gold would push back above 48.58. Break and hold above that level, and continue building momentum. If the market manages to sustain above that high, the next major upside targets could appear in the 5000 to 5200 region. At the moment, this scenario looks a bit less likely because the buy-side liquidity has already been swept, but in financial markets nothing is impossible, and strong bullish momentum could still drive the price higher. The second scenario is slightly more technical and actually quite common after a liquidity sweep. Gold could retrace into the 50% area of the current weekly candle, or what traders often call the OT zone, to collect some internal liquidity. From there, the market might find buyers again and attempt another move toward the candle's high. If this scenario unfolds, gold may spend some more time moving sideways within this range, creating a consolidation phase before the next big directional move. Throughout this entire structure, there is one level that remains extremely important for the overall bullish outlook, and that level is 4,602. As long as gold stays above this support, the bullish structure on the higher timeframe remains intact and the market can continue to consolidate or gradually move higher, but the story changes completely if this support fails. If, for any reason, gold breaks below 4,602 and starts holding beneath that level, it would signal a significant shift in market structure. In that case, the next major downside target on the chart could come much lower, with the 4,100 area becoming the first major objective for the sellers. So as we move into the next trading week, the chart is essentially telling us to watch three things very carefully: the 4,858 high, the mid-range liquidity within the current candle, and most importantly the 4602 support that is holding the entire bullish structure together. The market has already played its first move by sweeping liquidity. Now the next move will reveal whether gold is preparing for another push higher. A period of consolidation, or a deeper correction. Now let's shift our focus to the daily chart of gold, because this is where we start to see the finer details of what the market might be planning next. If you look closely at the daily structure, you can clearly notice the same type of rejection that we discussed earlier on the weekly chart. The price pushed higher during the week, but the candles are leaving behind noticeable rejection wicks. This tells us that although buyers were able to move the market up, sellers stepped in at higher prices and pushed it back down before the candle could close near the top. But there is another important detail hidden inside this daily rejection that deserves attention. The 50% level of this rejection wick comes around the 4,802 area. This level now becomes a very interesting point on the chart because it can act as a short-term decision zone for the market. From here, the market basically has two paths it can follow. One possibility is that gold may move up toward the 4802 area, grab the liquidity around that zone, and then rotate back down, aligning with the levels and scenarios we already discussed on the weekly time frame. In that case, the market could start moving back toward the lower side of the range. The second possibility is that gold manages to close daily candles above 4802 and maintain strength above that level. If that happens, it would suggest that buyers are still active and the market may continue forming a bullish structure, potentially attempting another move toward the higher levels again. Interestingly, even on the daily time frame, the most important support level still remains the same, the 4,602 zone. This level continues to act as the backbone of the entire bullish structure. As long as gold stays above it, the market can still remain stable or consolidate before making its next big move. At the moment, it feels like the market is approaching a point where it has to decide the range for the entire coming week. And very often, that decision starts to reveal itself right at the beginning of the week. That's why Monday's price action will be very important. The way gold starts the week, whether it pushes toward the upper liquidity around 4,802 or starts showing weakness, could give us the first clue about the direction and range that the market might follow for the rest of the week. So for now, the best approach is simply to watch how the market opens and how the first moves of the week develop, because those early movements often set the tone for everything that follows. If we move down to the 4-hour chart, the same key zones become even clearer. The market is still respecting the 4602 support on the downside and the 4800 resistance on the upside. These two levels are essentially shaping the short-term battlefield for gold right now. What makes the current market even more interesting is the kind of price action we are seeing on the 4-hour time frame. Recently, gold has been giving very strong and clean moves within each 4-hour candle, which is something many traders are really enjoying. The volatility inside this range is creating plenty of opportunities, and traders who are actively following the market are finding some really exciting setups during these movements. So even though the higher time frames are showing a consolidation phase between major levels, the lower time frames, especially the 4-hour chart, are still offering powerful intraday swings, which makes the market quite engaging for active traders. With that, we've covered the complete analysis for gold across the weekly, daily, and 4-hour time frames. If you found this analysis helpful, don't forget to like the video, share it with others, and subscribe to the channel so you don't miss the upcoming market breakdowns. And if there's any specific chart or market that you would like me to analyze in the next video, feel free to let me know in the comments. I'll see you again with another detailed analysis in the next video. So until then, take care and trade smart.